guys, welcome back again. Nice to actually have you here. And the essence of what we're doing is to teach you technical analysis. You master the craft, go out there, explore, become a professional trader, and make some good cash for yourself. Now, you can see an image right in front of you. You have two animals. Okay, you have two animals. One is a bull and one is a bear. Now, this right here is the bear. B-E-A-R, and this other animal right here is the bull. Now, the mode of operation of these animals made the financial market to actually adopt adopt them as a key terminology as to why the market is called bullish and bearish. Now, can you see the bear right here? Can you see the bear right here? This one. Observe the way it's actually observe the way it's fighting. Do you observe something? It's raising its hand, okay, to hit the opponent. Basically, in the real life, if you are very accustomed to watching Nat Geo Wild, you understand that bears attack with their hands. Okay, they try to catch their prey and smack them down. Okay, that is how they fight. Now, this is why the market adopted this animal, or rather this terminology, for representing sellers in the market. Okay, when we start talking about resistance and support, you understand better. But grab the concept. When you say a market is bearish, it means that sellers are dominant and they are pushing the price down. That's why you see the word bear. You can see the bear is raising his hand, smacking price down. Now, on the other end, can you see this animal? Can you see this? Can you see this animal here? This is the bull. Okay, basically, this is what? The bull. Now, the bull does not fight with his hand. It fights with the horn. Okay, it fights with what? The horn. It tends to use the horn to push its prey. I mean, the opponent or whatever it is it wants to fight or attack. It uses the horn, first of all, as a defense mechanism, and secondly, as a mode or instrument for attack. It uses the horn to push the animal or prey that is fighting against, push them up. And that is why they've adopted this animal and the terminology as the bull to represent buyers in the market, because buyers push the price upwards. They are in control of what? Demand. They tend to push the price upwards. So, and whenever you see that the price of an asset is going up, it means that buyers are in charge of that market, or buyers are more than sellers in that market. Now, you now understand the whole concept of when you say a market is bullish, okay, and when a market is bearish. So you can see both of them fighting right here. Right? You can see both of them fighting. The bull is using the horn to attack the bear, and the bear is using his hand to smack the bull down. So basically, this is what happens in the financial market. Now, I'm going to take you a step further before we go into support and resistance. I'm going to show you what a bullish market looks like on our chart. I'll go over to TradingView right now and show you categorically what a bullish and bearish market looks like. Okay, now so let's go, guys. So now I'm on 1 day time frame on BTC USDT, and this is basically 1 day time frame, and I want you to check this out. This is what we call a bearish market. This is a bearish market right now. Okay, bearish market. Just as I explained, this is a bearish market. Bearish, meaning the bears are in control. Now, what classifies this market as a bearish market? That's the question you should be asking yourself. All right, what classifies this market as a what? Bearish market. Now, there are a lot of tools to actually know when a market is in a downtrend or in an uptrend. But the very first you actually want to know is the direction and the movement of price itself. Now, can you see that price is plunging downwards? Can you see that price is plunging down? Look at it. It's plunging downwards. Okay, that is the first sign to know that the market is bearish, meaning we're in a downtrend. All right, beautiful. Now, can you also see and observe that consecutively we were making lower lows consecutively? Now, what is a lower low? A lower low is when price action or price itself forms a lower price and forms another what price lower than what it formed before. Okay, just watch what I'm doing. This is basic to advanced. So form the low there, and again forming another low here again, which is now lower than this. It's now lower. It's lower than this previous guy right here. Good. Let me mark this. And then forming another low again at this point. Do you see it? Consecutively, we are forming what? Lower lows. But in a bullish market, it is not like that. Okay, in a bullish market, it's not like that. So now, let's look at what a bullish market looks like. I'm going to go back now in time and show you what a bullish market practically looks like. Now, the last bull run we had, look at it. Can you see it? Look at it. Let me show you guys. When we start going deeper, I mean very deep, when we talk about the advanced section, talking about break of structure, change in price trend, and all of that stuff, you will understand better. But for now, I'm going to take you up like a baby. So now, we want to talk about a bullish market. Now, the first sign you must put into consideration is, what does it look like? What does a bullish market look like? Now, the first sign, price is plunging upwards. You see it? Meaning the bulls are in town. The bulls are what? In town. Price is plunging upwards. Okay? Now, because you already know that price is plunging upwards, remember before, we're forming lower lows. Okay? We're forming lower lows on the bearish, what do you call it now? The bearish chart. Okay? We're forming lower lows and price was going down. But now we're forming higher highs. Now, what is a higher high? Or we call it an HH. Okay? HH. Now, a higher high is formed when price goes up and knocking off the previous high. Now, a typical example is what we have here. Let me show you. I'm going to make this very real. Good. Can you see it? Or let me even use my tools to draw these things. Let me use my tools to draw this. Use my tools on TradingView. Okay. Okay, now let me draw a trend line. Or let me even use do you see it? Beautiful. I'm going to make this line thicker so you see it clearly. You see, that's a high. Okay, at this point here. At this point here. Can you see it? Now, we've cut out that high. And what do you observe? Price went up. Okay, price went up. Came back again to now retest this zone. Do you see it? And after retesting it, somewhere around here, price went up again. Do you see it? Price went up again. So now we have another high again. Just watch what I'm doing. Have another high again. Somewhere around here. Do you see it? Good. Now price cancelled that high and then formed another high again, somewhere around here. That's what we're doing. You see it? We're still in an uptrend though. But would you believe that we could no longer continue the uptrend again? And price started to decline. Look at it. Price now started to what? Decline. Since we could not continue that uptrend again, which was somewhere around here, price could not break out to the upside. It could not break out to form another higher high again. So we cannot safely say that this uptrend has come to an what? To an end. You see it now? The uptrend has done what? Come to an end. Look at it. We couldn't break this previous one. This previous guy right here. We couldn't break it. So now, price started what? Retracing. But before this happens, your indicators must have alerted you. If you are very good with using your RSI, you should know that momentum is leaking away from the market. But I'm not going to go into details on all of that. We're still at the basic level, So basically this is just how you identify a bullish and bearish market for the basic level. There are other tools to use. As we go into indicators later on, you'll get to understand what these things mean. Okay, so basically that's what it is, and this is how you identify a bullish or bearish market.